Welcome to your Retirement Playbook. I'm your host, Joe Clark. Happy to have you along. Actually thrilled that you're taking the time to learn more about your retirement playbook, things that are going on in your life. And this really is about you. We're trying to give you things on this show that you need to consider that we think are valuable and important for the more than 1,100 families we take care of in more than 30 states across the United States. So I'm going to walk you through the way that I think about money and give you some things to think about. Now, if I was going to summarize the risk or what you're going to get out of this segment, it would be this. I love, maybe an analogy is a better answer. I love cooking for friends and family. I just do. I enjoy it. I've been to a few cooking schools, and some of you may go, oh, that means you're great. Not necessarily. Going to cooking schools is one thing. There's a difference between knowledge and wisdom, right? Knowledge is the information. Wisdom is how to apply it. I will assure you in a cooking school, you can put two cooks together and come out with two entirely different dishes if one of them has better wisdom on when to add the onions or when to add the oil or when to add the salt to the terminology. But anyhow, I love cooking for friends and family, but it fascinates me the number of people I watch who have a fear over cooking and yet an absolute confidence over managing their investments. What if I do it wrong? What if I burn something? Folks, you get one shot at retirement. I can order Pizza King, right? I mean, I can pick up the phone call and I can call and order pizza. If the dish is burnt, you may have a stinky house. We'll eat outside, right? But you only get one shot at retirement. Please don't blow it. We are in very, very volatile, very, very changing times. It is very, very complex. And we want to help you make the best decisions you possibly can. Now, we are fiduciaries at the Financial Enhancement Group. That means I get paid to treat your money as if it were our money and we were in the same situation. Last week, we talked about character trust and competency trust. And I get it. You care more about your money and you trust you more than you're probably going to trust me and more than I care about your money. That is probably a fair and accurate statement. Some of my families would argue and say I care more, but we won't even go there. For this minute, let's just use this theory. You trust you more than you trust me, and you care about your money more than I'm going to care about it. Possibly, probably. But let's go to the competency side. And that's where you really have to have the ability to do things with the finances that make the most sense within those 5 critical elements we talk about all the time. Your life after work, the annual tax plan, the weekly investment playbook, the life happens, the good and bad and ugly of life, and last but not least, the legacy plan. And how do you bring that all together with all those decisions that operate? Right, so what we try to do on this show is to give you as much of that competency as we can. At the end of the day, we're hoping that you call us at yourlifeafterwork.com or 800-928-4001, but we want to give you that knowledge and that information. What I'm going to try to do is to walk you through my decision-making process so that you can understand it. So let's go to my favorite menu, not to my favorite place to eat. People laugh and go, how often do you eat there? I don't think I've been to the Cheesecake Factory in 2 years. Maybe 3. But I love the menu. There are 250 choices on a Cheesecake Factory menu. 250 choices. How in the world do you narrow that down? And the answer is some people would do it by the style. Some people like Italian more than the Louisiana or Creole, or more than Indian, or more than good old-fashioned American hamburgers and hot dogs, right? Some people would do it by style. Some people do it by ingredient. They like pork more than chicken. They like beef more than fish, right? Pretty easy to do. Spice is obviously one of those, so we'll stay away from the curry if we don't like the spicy stuff and go towards something that's a little more bland, depending on your dietary restrictions and where you are. Some people do it based on whether they're vegetarians or vegans or whether they're carnivores, right? And they want as much meat as they can possibly get. The point is you have a process in place. You don't look at 250 things and have to start with 250 and go from there. You've got a filter that knocks those down. So in the world of finance, what are those filters? Well, I've got it down to 4 that clarify all of my messages. And sometimes people think I'm over anal about this, But I make sure that something is answered in each one of these 4 areas before I make an investment decision. The first one is risk and volatility. Risk is that I don't get my money back at all, right? I put the money in, the company went under. It didn't have no survivability at all. It was gone. Volatility is that the price was different at independent times. That's what the market does. We all know historically the market goes higher over an extended period of time with a lot of upsies and downsies in between, right? That is just the truth of the matter. We can go all the way back into the pandemic. There's still rarely a day after March of 2020 that you wouldn't have wanted to have been invested in the market today. The market is still higher than it was then, even though it's had deterioration here in 2022. This is recorded in case you're listening to it into the future. So over an extended period of time, the market does tend to work itself higher. It has historically, at least in a diversified portfolio. But short term, I may need my money out and the market may be down. So that's a big deal in distribution or retirement planning that you have to pay attention to. So the first one is risk and volatility. One question. The second one are fees and expenses. Jerry Maguire had this right years and years ago. Show me the money, right? How is the other side of the deal getting paid? I do not mind paying people at all. I will use as much service industry as I possibly can. But I want to know how they're being compensated to make sure that it's being fair and I'm getting what I'm paying for and that I'm paying for what I need, right? Those are different things if you think about it. Am I paying for what I need and am I getting what I'm paying for? And am I paying a fair price? You really have to break all of that down and understand it. A lot of what happens in the compensation on Wall Street is stealth. It's flat out hidden. And people don't see the fees and expenses that they spend inside of mutual funds where they could easily save themselves the fee in many cases that they would pay us as a fiduciary to manage their money. They're given to somebody who's not helping them, that they're not going to meet and aren't going to meet. It's a very, very interesting thing, but we have all those comparisons we can sit down and show you. So risk and volatility, fees and expenses. The third one is taxes. But here's the key. It's taxes both today and tomorrow. Nobody wants to pay more taxes today. But I will assure you the strength of your financial plan is built upon paying less taxes over an extended period of time, or what I like to call your financial journey. So it's tax planning both today and tomorrow. And last but not least, people have laughed at me for the last 8 years as I've talked about this because inflation has been almost zero. Inflation is a sleeping giant. And when it roars, as you're seeing today, it is really roaring. It's real return. That's the fourth thing. How is my purchasing power going to be impacted by the financial decisions that I'm getting ready to make today? Is this going to do well with inflation, poorly with inflation? So risk and volatility, fees and expenses, taxes today and tomorrow, and real return. Then I'm going to move to the family focus process. That's our trademarked process that we have internally. But I'm going to do all of those things within the guidelines of those 4 things that I call the fiduciary focus. Risk and volatility, fees, expenses, taxes today and tomorrow, and real return. I'll remind you, James Clear, author of Atomic Habits, said that success is never dependent upon one thing, but failure can be. Your financial journey, in my opinion, is based on the success of 5 areas. Your life after work, that's your retirement planning, your annual tax plan, the investment playbook, how you deal with short-term volatility in the marketplace. Third is the things that happen in life, good, bad, and ugly, along the way. And last but not least is when you're gone, who gets it and how do they get it? How easy is that done? And it starts with your financial vision. So we help orchestrate or coordinate, if you will, your financial vision between you and your significant others to make sure that you're on the same page. Not real long, a brief statement that says, here's who you are, here's where you want to go. Hopefully not quantitative, meaning there's no numbers. Qualitative, I want to, this is the life that I want to be able to live so that we make sure that we're on the same page. Then from there, you begin to deal with those 5 critical elements that we just talked about. Now, last but not least, the third thing in my thought process, my filter, my decision making, is I want to control what I can control. I can control the amount of money that I contribute. I can control the amount of money that I do in tax distribution, for instance. The amount of withholding if I'm putting money in, whether I want it to be Roth or whether I want it to be tax deferred. I can control the amount of money that's going into various plans up to the limit that the IRS provides, right? So there is some control that I have there. What I can't control is the annual return. The shorter the window, the less I can control it. The longer term, the more accurate my projections will be, as long as, again, if you're in preservation, you're there beginning, middle, and end. And I can't control inflation. Now, that one's argumentative to me. I believe we have different inflation rates. My inflation rate is probably higher than most of yours. I love travel, which is going up, and I use an awful lot of services. I don't enjoy some of the stuff that happens around the house. You probably do. You may. A lot of our families like that outdoor work. I don't. I would rather go to work, do this for you, and pay somebody else to do the mowing and the landscaping and those kind of things. Inflation in the services sector is going to be higher than inflation in the goods sector. But regardless, you need a checklist for your decision making that you can go down. I love golf. You watched the golf show I did a few weeks ago. I almost left the battery charger for my powered cart at home yesterday morning when I got ready to go out to go golf because I didn't have a checklist. Now, I didn't forget it, and I do have a checklist now to make sure that I don't forget something that basic. If I could forget something that basic, what are you forgetting about retirement planning? Make sure that you've got risk volatility, fees and expenses, taxes today and tomorrow, real return. Break it down into retirement, tax, investment, the oopsies and the goodsies of life, and the legacy, the estate planning side. Make sure you've addressed all those. Control what it is you can control, or better yet, give us a call to Financial Enhancement Group at 800-928-4001 or go to yourlifeafterwork.com. Get signed up for a Next Steps meeting. We'll give you 90 minutes complimentary. yourlifeafterwork.com. We'll see you soon.